Hello and welcome back to the Note. Well, the third quarter is over and many people will be saying good riddance. The worst quarter for most world stock markets since at least 2011. More or less anywhere you care to mention fell across Asia, Europe in particular, and here in the US. You also saw obviously very big sell-off in commodities. However, we end the quarter on an up note. We've had a nice bounce across the world today, both in commodities and in stocks. There is some hope as the lows from August held here in the US that it may be over for now. Now, perhaps the critical question for deciding whether it is whether the earnings we hear about in the next few weeks have adequately been priced in by the market. What we're looking at here is the price to book multiple for the S&P 500 materials index going back 5 years. You can see obviously that it's been written down very aggressively in the last few weeks, but that it looks on recent evidence as though it could go much further. There has been an ongoing fall in materials prices throughout almost all of this period, and for a large part of that time the market has chosen to react as though that is a transitory move. Now, we've seen the beginning of an attempt to price that in. We've seen remarkable cuts in brokers' forecasts for the materials sector. A lot now depends on exactly what we hear from that sector and exactly how they guide for the future. Now, a broader factor as to why materials matters so much is that it feeds into the prospects for deflation. If we take a look at this next chart, which shows you prospective inflation forecasts as embedded in the bond market, you can see that we had a new leg down in the last few weeks. The predicted annualized inflation over the next 10 years have got down below 1.4%. That's a remarkably bearish signal, as it suggests that the market really sees no strength in global demand whatever. That's largely because of the weakness that you see in commodity prices. Is this accurate, or is this an overreaction to the obviously somewhat scary news we've been having from China during this quarter? That, I think, is the critical question as we go forward. This was a lousy quarter. It ended on an up note. Whether it foretells worse to come depends on exactly the extent of those deflationary pressures and whether we have yet really priced in those deflationary pressures, particularly as they manifest themselves in the price of material stocks.